Hello and welcome to another episode of the Federal Church Presents Better Than Bloomberg. Continuing our coverage of the 2023 global financial system collapse, the worst ever. I got another good note from Zero Hedge. Fed emergency bank bailout facility hits record high. Money market inflows suggest deposit run not over yet. With regional bank stocks squeezing higher, one could be forgiven for thinking everything's awesome again, if your memory or charts only go back a week or so. Except last week's deposit flows did not support that narrative, and tonight's ongoing inflows into money market funds. And again, I don't think these people figured out how money market funds work yet, or who runs them. Suggests banks are still struggling to keep hold of their deposits. Money market funds saw $13.6 billion of inflows, pushing the aggregate to a record high of $5.341 trillion. That's with a T. That is over $520 billion inflows in the last 3 months. That's $500 billion. Retail funds saw over $14 billion of inflows, while institutional funds actually saw a small outflow. The surge in money market fund inflows strongly suggests tomorrow's H8 deposit report will show the bank walk run is continuing. Again, this was from May 18, and we'll go over that report today. That was released today. After last week saw a tiny drop in the Fed's balance sheet, the Fed's infamous H41 report shows that it dropped $46.3 billion last week, the 8th straight week of declines. As far as QT is concerned, after last week saw an increase of $461 million, the total securities held outright dropped $29.89 billion last week. QT started up again. Doesn't really matter when you keep printing fucking money. The total size of the Fed's backstopping facilities remained extremely high at around $305 billion. It's because the banks are insolvent. With the Fed's bank term funding program rising yet again to a new record high, up from $83.1 to $87 billion. Central Bank had $96.1 billion of loans outstanding to financial institutions through 2 backstop lending facilities in the week through May 17, compared with $92.4 billion the previous week. U.S. bank reserves at the Fed rose for the second week in a row for their accounting shenanigans. And they're insolvent. Tomorrow we get the big one, more answers after the bell when the Fed releases its H8 bank report on bank deposit flows and whether the seasonal adjustments are total bullshit or not. You all know this stuff is fudged, and they're insolvent. Don't forget why. You do less praying, you do more donating, paying your damn tie. Think of it as 10% for the big guy.